Jai Hind, good morning. I'm Colonel Veeraj Sahai, and I have got a couple of companies which we run. Colonel's Construction Private Limited, which is into architecture, interior, and construction, and Colonel's Infracom, which is into infrastructure. I'm also director of Initialize.in, that is into AI. Let me introduce Colonel Sunil Didi. I have known Colonel Didi for more than 20 years. He has been into wealth creation. He started with wealth creation for Fauji's and now he's bifurcated and he has a bigger canvas covering most of the people. He specializes into best investment and reinvestment in mutual funds so as to maximize your profits as also reduce your taxes. Over to Colonel Sunil Didi.
Jai Hind, everyone. The aim of this podcast is to share knowledge about what we can do at this stage of this financial year with just about 7-8 days left for the year to end. What can we do to save taxes? And Biraj and self, we were talking and we realized that most people are not aware of what they can do to save taxes, and people are running like mad to buy products, invest somewhere to save taxes. So I think the aim of this podcast is to educate people what they can do to save taxes. Now, sir, coming on to, like you mentioned, that the idea is for people to take action now. So, can you just elaborate as to how stocks are taxed, stocks and mutual funds, how are they taxed, and what actions can people take before 31st of March to save these taxes?
So, coming to the mutual fund part, firstly, I will recommend you to take over, as most of us are aware that as of now, 1.25 lakhs of long-term capital gain is tax-free.
Correct.
Then there is short-term capital gain, and then there is speculative, that is future and options, or intraday. Intraday and speculative, you can do nothing about it because that is taxed as per your income slab.
Correct.
So, with respect to tax harvesting, as far as equity is concerned, you have got the next few days. I've been telling people for quite some time, maybe more than 2 months, that if you are in losses, you should sell the stocks which are weak and they are in losses so that the income which you have generated till now gets reduced. That is, the profits which you have generated gets reduced. Incidentally, quite a few of us don't understand that all profits and loss are only on the accrued value. If we have sold, then is a profit or a loss. If you have not sold, that's notional. Income tax doesn't bother about that.
That's a realized gain.
Yeah,
Sir.
realized gains.
So what you're trying to say is, sir, that there is an opportunity now for people because the markets are down, so people can possibly sell in loss and reduce their taxes.
That's right. Suppose you had bought a share which was for 100 rupees and today it is at 80 rupees. So you can sell it today, book that loss of 20 rupees, and then you can buy it tomorrow or any day after. You should not, or you cannot buy the same day if you want to save taxes, because if you buy and sell on the same day, then it is a speculative or intraday. So it goes into business. I'll request you to explain certain things which we can do in mutual funds in the next few days to save taxes.
So now, sir, first thing you mentioned about opportunity that most mutual fund investors are not using because they have been told that mutual funds are for long term, and what they keep doing is they keep investing, they never take out money. Now, if you don't take out money and you don't reinvest it, you will never see losses. There are hardly any losses.
That's right.
So, one mistake that most mutual fund investors are making up, they are not selling their mutual funds. So, like you mentioned, that realized profits are taxed. So, if they are not selling, there are no realized profits. So, they are accumulating taxes. So, what they need to do right now is, first thing before 27th of till 27th of this month, they must sell profits worth 1.25 lakhs. In effect, they might end up selling mutual funds for about 5 lakhs, 7 lakhs, 10 lakhs, so that the profit becomes 1.25 lakhs. This they must do, and also start investing both in their and their wife's name and adult children if they have, so as to spread and reduce the taxes.
Yeah, what I understand from this is that basically the advantage which the government is giving you of having a tax-free long-term capital gain realization of 1.25 lakh, you must use it. If you don't use it actually you are losing money.
It lapses.
It lapses. So next year, if you get that becomes 1.25 becomes say 1.45, you will be paying tax on that 20,000,
Otherwise,
which is actually a loss. Otherwise,
yes.
otherwise you wouldn't have paid at all.
Correct.
Because next year again it is 1.25 or it is 1.5.
Yes.
So your profit is only 20,000, so you don't pay any tax.
Correct.
But in this case, you will pay.
Yes.
So every year you have to redeem. Now coming to the concept of tax harvesting, which we were talking of, if you are not in loss, you are in profit, and the profit is say even 1.25 lakhs, and you sell the shares. The moot point is that if you want to book losses, then it has to be in negative. Suppose you have got 175 as profit, 1,75,000 as profit, 125 is tax free. So if you book 50,000, then you have booked some losses, but you are not paying taxes.
Correct.
But if you book 75,000, then you are not making the best use of it.
Correct.
So that is what one has to understand. And if you go into negative, suppose you have booked loss of say 2 lakhs. So this loss, you can carry it forward for next 8 years.
Correct, sir.
Whether it is short term or long term.
Correct, sir.
Only in terms of speculative things, you can carry forward for 4 years.
So point to note here is that long-term losses can be set off only against long-term gains, whereas short-term losses can be set off against long-term and short-term gains. The point to keep in mind is the income tax return must be filed before the due date. You can't be filing a late date.
It's a very important point.
And you have to share the capital gain statement with your CA and make sure he factors the loss that you have incurred into your income idea.
Yes, the government declares that what is the last day. Normally it is 30th of June. At times it gets extended to 15th of July or September during Corona time, whatever. But you should fill in your income tax return in time, and this aspect that whatever loss you have made has to be reflected in your ITR. If it is not reflected, it is not there.
Yes.
The next point is, if you have had a long-term capital gain and you did not have a loss earlier, then you have to pay taxes this year, and it will long-term capital gain of this year will not be taken forward next year. So if you have made a gain of 2 lakhs this year and you make a loss of 1 lakh next year, it will not be offset.
It will not be offset.
It will be offset in the future.
Correct.
So that is what we have to understand.
So would you like to say something about the mistakes people can avoid at this stage? One mistake that, one or two mistakes.
Yeah, many of us would be getting hounded by the insurance agents. What happens is, all financial establishments, they have a deadline of financial year 31st of March. So hundreds of people will come to you and say, invest in this, invest in that. Insurance is insurance. It is not an investment. If you understand the basics of this, we will not falter. If you have to take insurance, it doesn't mean you have to do it by 31st of March. More so with the new tax regime and the old tax regime, the new tax regime has become so friendly that if you do not invest in any of these, you are better off. As I had mentioned earlier also, insurance you have to only take in limited things like your car insurance, your medical if it is required, your accidental insurance, term insurance, insurance of your house and household goods. These are the things where you need insurance because it is covering your risk.
Absolutely.
Anything which is to do with bonus or growth 3 times, 4 times, it is all, I'll specify it in colons, it is loss of money. So if you see it long term, you are losing money by putting anything in which is investment in insurance.
So what we can do is, maybe in one of the future podcasts, we can discuss only insurance as an investment objective.
Yeah, that will
the
be
way it is sold, that how it is missold. Various pension plan, children plan, and what is the reality of those? Maybe we can cover in one of the future ones. But right now, what you're saying is that they must not fall prey to any agent who approaches them till 31st of March.
And they will come with a gutso that you have to do it by 31st, otherwise you will not save. I'll request Colonel Sunil that we will be showing one sample of this.
They can just go to ClearTax. So go to Google, type ClearTax. ClearTax is a website, and on the home page, on the top or the bottom right, they have a tax calculator. go to the tax calculator. On the fresh page, first thing you do is select the current financial year ending 31st of March 2025. Select your age band, continue, and then enter your particulars. How much salary are you getting, annual income, how much deductions. Once you do everything, the website in few seconds gives you which tax regime is better. So they have buttons on top, old regime versus new regime. You just click on those to find out which is beneficial for you. Select that regime and just go ahead and file. New tax regime, what government has done is they have reduced the tax slabs. So you are paying lesser tax, but they've done away with deductions. In the old tax regime, there were a lot of deductions. So therefore, we had to do 1.5 lakhs in ATC and then something else somewhere. Now, slowly, government's aim is to push everyone into new tax regime. And therefore, if new tax regime is better for you, and it is better for most people, therefore you will find that buying any product which is to save taxes is not going to work.
Yeah, there is a mindset problem with many of us who think that unless we have that ATC, ATCCC, ATD, ATB, you are not happy. But what the present setup is trying is reduce your dependence on your CAs.
Correct.
You can understand taxation basics. If you've got a varied type of income, like you're into future and option, you're into equities, you're into intraday, your rental income and whatever business and other thing, then it's a different thing. Then you'll need a CA. But for a normal person who just got his salary and he does equity or mutual fund and with rent or something, you can do your taxation yourself.
Correct.
However, if you are into complicated thing, I'll recommend do not try to become an expert, because what the CA can do, you will not be able to do. So in that case, go to a CA. But if you're a normal salaried class guy, you can fill your income tax return yourself.
So I think, sir, we've covered most of the things. The only request is, if people find this useful, firstly take actions now before 27th before 27th, because in case of mutual fund investors, 28th is the cutoff day.
Yes, that's very important.
So you will not get the NAV of 28 if you do the transaction after 3 p.m. So 27th, it will be better.
So you were actually 3-4 days.
Just 3-4 days. So do this tax harvesting.
And can you do it today or tomorrow? That is today.
Yes,
Saturday,
yes,
Sunday also you
yes,
can do it.
You can do those transactions now.
And that will come up on the next work
Yes.
day.
So, sir, at this stage of the financial year, when the year is about to end, what is that one mistake that people should avoid for saving taxes, and what actions they must take to save taxes?
Firstly, one has to understand that the time left is just 5 days. So whatever action you have to take it by 27th of March, because it will accrue on 28th. Second is, do not go running after insurance, because that is a bad investment. Avoid it. There will be guys telling you this is the best thing, because they are getting a huge cut. Coming to the tax harvesting point, if you have not made a long-term capital gain of 1.25 lakh by redeeming your mutual funds, please do that, so that you get 1.25 lakh extra and you do not have to pay tax on that in future.
Stocks and mutual funds, because a lot of people do stocks also for long term, they don't invest. They don't
for both.
Yeah.
Next is, if you have got short-term capital gain or long-term capital gain beyond 1.25 lakh, you may like to book some losses in long term. And if you got short-term capital gain, book some losses. So this is called tax harvesting. By booking some losses, your tax amount will get less, as also your value of that mutual fund or the stock becomes, the buy value becomes less. I'll give you a very small example. If you have bought a share at 100, it is at 80, sell some at 80 and then buy it next day, tomorrow or day after, in the range, same range.
Yeah.
So your buy rate now becomes 80, whereas you have booked 20 rupees loss per share, and your total short-term or long-term capital gain has reduced.
And what you're saying is that don't buy it the same day.
Yes, if you buy the same day and buy and sell the same day, then it is intraday. It is not considered as long-term or capital short-term. It is considered as intraday or business income. So it is taxed as per your business total
taxable
high slab.
Correct. So that is one mistake. And sir, would you like to highlight as to how if somebody has got losses? Firstly, long-term gains if they complete the year at the end.
This part again. So if you have got a long-term capital loss, you can carry it forward to the next 8 years. Same is with short-term capital loss. You can carry it forward for 8 years. For intraday or speculative income, that is future on option, you can carry it forward for 4 years. A loss can be carried forward. No gain can be carried forward.
Absolutely, sir.
Gain, you have to pay tax this year. If you make loss next year, then it becomes a new story and it carries forward for the next 4 or 8 years depending on the asset class.
Yes. And the point to remember here, while you are, if you have losses this year, remember to file your ITR before the due date, that is 31st of whatever is the due date for filing the ITR. Don't file a delayed ITR.
Yeah, normally it is 30th of June. At times government extends. Don't wait till 30th of June because the web or the net gets slow. You might not be able to file it on that day. So please file it in time and make the best use of the policies which the government has.
And make sure that your CA has factored in, or if you have entered that loss that you're carrying forward, or last year's losses also if you are carrying forward.
Very right. If your income tax return does not reflect that you have had a capital loss in any asset class, it will not be, you cannot equate it with the profits in the next year. So your income tax return has to show that you have made this loss. If you have not made a loss, it is good. But if you have made a loss, you should show it.
So what I've understood from your side is, for stocks, people must be in losses because they must have bought something in the recent past, and that must be in loss. So they must sell in loss and maybe buy it again, either themselves or their wife's name, whatever. But they buy it again after a day's gap so that the loss gets reflected.
Yes, actually, we are not out of the woods. The market today is 23,200, 23,300, but it can come back to 22,800. So don't be in a desperation to buy anything. You can, if you have sold today and if you buy it at 10 rupees extra on Monday, there's no harm.
Correct.
Because you have actually made 20% saving.
Yes.
On your short-term capital gain.
Yes.
It is taxed at 20%, so you have saved 20%. So with this, we come to the end of discussion today. We would request you to like, share and subscribe because it will help others to understand how they can save their tax and how they can grow their wealth. Thank you.